Welcome to the Swing Trading with Cycles channel. We're going to do our update on precious metals today, gold, silver, GDX, and we'll look at ratios as always. If you're new to the channel, welcome. If you're a returning member, welcome back. Just for broader context, gold and precious metals are in a long-term uptrend since that important bottom in September, the 8-year cycle low for gold, and that generally means positive things for silver and GDX as well. The last 8-year cycle low for gold was December 2015. That led to a multi-year rally. And so there's no reason to think that this one is going to lead to a multi-year rally as well. As always, take a look at the pinned comment to get link to Twitter if you're not following on Twitter, but also just past videos and some important foundational concepts like swing highs, swing lows, etc. So speaking of which, cycles, that's the important lens we look at things through, but it's really about price action, right? The cycles allow you to categorize the price action. So for instance, right here and now, we just made a high on Thursday, April 13th, on day 32. That's just saying, all that means is that we have rallied for 32 days from this swing low here. Again, there's a whole video on swing lows to get yourself up to speed, and a whole video on swing highs. So from this swing low here to this swing high here, that is 32 days. And we know this is a swing high. We closed as a swing high on Friday, right? We closed well below the low of this candle, which marks the high. And so that makes this a swing high. Now, what we're looking for a bearish is follow through. So to make a lower low below the low of this candle, so the Friday low, which is at 1992. And we closed here at 2003, I think, right? Something like that. And so this is most likely the beginning of the daily cycle decline. Just like this was a very long daily cycle that had a 65-day rally. And then you had a decline for about 18 days into a day 83 low. Here we had a 32-day rally, and now we're likely going to have, who knows, maybe a 5 to 7 day decline. Because generally gold cycles tend to be in the 33 to 35 day range. And so this is a very late high, which is bullish, right? It means it's very right translated. But to close this violently below to make this much of a swing high, I should say, is definitely telling. And we'll look at the weekly chart. The other thing is we closed below the 10-day moving average. That's this line here. So you can see another signal. Now you can see we did that here too, where we basically closed below the 10-day moving average. The difference is we didn't make a lower low below this candle. That's what this line is here, right? So you can see this 4-day decline actually held all within the range of this candle. These are the kinds of details you need to understand so you're not panicking. You're not thinking, you're not sort of swayed by emotion where you're like, oh, it's a down day. It's like, yeah. Yes, we've made a lower low below the previous day, but we're still inside the range of this big up candle. And so that's the kind of context that you're going to want to have. And so in general, we're going to want, like, 1976 becomes an important level. If this is actually our daily cycle decline, we get a few more days, we get several more down days. And let's look at the weekly chart. And then the next level would be this line here, this area here. It's not a line, it's an area, not like a precise level. But look at how price kind of aggregated in this zone here. So you'd expect that's around like the 1950 area. And so let's look at the weekly chart. So importantly, we're on week 6, or we just completed week 6 of the weekly cycle. So that is not very late. The weekly cycles are generally longer than 20 weeks. And so even if it's going to be not that right translated, it could still rally for another 3 or 4 weeks. But of course, we just said we're probably moving into a daily cycle decline, which means you would expect weakness on the weekly chart as well. So very tactically, think about the shape of this candle. It means the next week's candle is most likely, like, I would say more so, best case scenario is that it's going to open as an inside candle, but probably on the lower end of the range, right? So something like that. And then it's a question of, does a daily cycle decline take us below the low of last week, making this week 6 a swing high, right? The same way we have a swing high on the daily, if we have follow through, so to be clear, that would be below the low of this week, which was 1981. So we go below 1981, 1981.78, so 78 cents, give or take. If we go below that level, right, like this candle does like this, for instance, especially if we were to close next week like this, Well, that's what you might expect in the daily cycle decline. Now, this is where it gets complicated, is that you could have that happen and then still have a nice little reversal. So imagine that becomes basically a higher low. Where is the So, if you think about, like, look at this. So this is your major bottom, again, your 8-year cycle low, and just look at the pattern we've had here, right? So of course we've had these higher lows. I'll gloss over them, just kind of broad strokes. You had this up move and then this downdraft. Certainly, people, you got nervous, but what did that end up being? A higher low, right? It held well above the 8-year cycle low, and so now we're doing this. Wouldn't it be crazy to do something like this before something like that? Like, think about that, right? So this is a case where, like, this is where the trading is more complex. It's not just black and white, like, oh no, we have a weekly swing high, that's the end of the world. Not necessarily. We're in an uptrend right now, and so surprises come to the upside, especially as we're already on day 33 as of Friday. We could get a daily cycle low that happens even next week, and so maybe this candle actually wicks out, like, it goes all the way down here, for instance, but a lot of that is wick, and then this becomes basically another higher low compared to this. Again, like, essentially this thing. So that would be my expectation. Not necessarily that it has to bottom next week. Maybe it takes a little bit longer, but expecting that this daily cycle makes a higher low and we continue up. And so let's look at the monthly chart, and then we'll move on to silver and we'll look at the miners. And so the monthly chart is building a little upper wick, as you would expect, because of the pullback on the lower time frame. The monthly chart opened at 1969. So as we talk about all these levels, always important to understand what the opening price was of a candle, especially a higher time frame candle, because below that price, it's red, right? It's going lower. Above that price, it remains green. So 1969 becomes an important pivot point. We've talked about how the 1950 area is an important point. So if we find ourselves down at 1950, important to understand, to realize that the April candle, the monthly candle, is now red. That could recover and change, and this could become another higher low on the monthly chart, but important to understand that context. And this is actually a 1-hour chart, not a good look on the 1 hour, right? So, like, I mean, you can see this. This is, if you looked in the textbook, you'd say, like, oh yeah, right, this is the textbook downtrend. Higher highs, or excuse me, lower lows and lower highs, and you expect the next move to be something like that. This is your hourly chart. So this is how we closed out that Friday, and this is how we're going to open tomorrow. I mean, obviously we could open like up here, do something crazy like that, but we're clearly in a short-term downtrend, right? This, on the hourly chart, we are absolutely in a downtrend. The 8-hour chart is, at this point, the 8-hour chart would really need to kind of cut below here to be in a downtrend. So that's that pivot at 1981. So these are all important levels where you could see a reversal of price very easily. But important, we're gonna be watching that weekly candle to understand, because that's an important piece as well. Like, think about that. If we do break down below the low from this week, that 1981 level that we just quoted, and recapture 1981, that becomes a false breakdown on the weekly level. All of these patterns, they all kind of mean the same thing. It becomes a higher low on this weekly chart, and another push higher. Thinking about the weekly cycle, you'd probably expect we don't get a top until like week 15, maybe on a bullish side, maybe 12 if it wasn't super bullish. And next week will be week 7. So that gives you a kind of a sense. We could have a nice little bit of a rally to go. And again, reminder, thinking about that monthly chart, this was your decline into the last 8-year cycle low, and this was your rally out of the last 8-year cycle, right? We had a very flat period for many, many months, and then we had this upside acceleration. But the whole uptrend portion of it, this portion, so from this swing low to this swing high, lasted 56 months. That doesn't mean we're going to have a 56-month rally this time, but we're on month 7. So, and I mean, look at the shape of this chart. This is clearly bullish. People talk about triple tops. I mean, whatever. We're gonna obviously need to get past this point, which has been difficult in the past, to say the least. All the more reason why, think about that tactically. We're moving into a daily cycle low now, and so the move out of that daily cycle low should take us to an all-time high. Because if it doesn't, like, if it doesn't do it, then it's not going to do it, right? So that would mean that we should see a new all-time high by the middle of May, let's call it, right? Like, let's think of because think about that. Let's just go back to the daily chart. If we get our low on, let's just even say it stretches out and it's like on day 40, right? So we get our low around April 25th, 26th, in that neighborhood. If we had another advance where we advanced for, let's say, 20 days, right? Like, let's say we even topped in 20 days, that would be May 22nd. So I would expect, so to be clear, we get a downdraft, into this daily cycle low and then a move higher. You would expect that move higher to make a new all-time high. It's just really a question at what level. So that really kind of puts a clock on it. This is going to be really interesting. Let's look at silver and GDX. So silver is on day 25. Same scenario, made a swing high. Actually, different scenario. That's not true. Silver actually made a bearish outside daily candle on Friday. And when it does that, that tends to lead to more downside. You've seen, so this wasn't quite a bearish outside candle because it didn't make a new low, but you got that big follow through the following day, so that these two candles become a compound outside bearish candle of these two. And so that definitely is another sign that we're probably moving into a daily cycle low here. And you can see it's hovering above the 10-period moving average, whereas gold closed below it. And on the weekly chart, silver is in a very similar place in terms of count. So what is that? 1, 2, 3, 4, 5. So we just finished week 5. So we're going to start week 6 next week. And similar to gold, there's a lot of the gold weekly candle. There's a lot of wick here. And so we're going to most likely open as an inside week. And the low that we want to watch for is 24.729. Because below that level makes this a swing high on week 5. But again, I do expect that surprises would come to the upside. That said, we'll watch the price action in real time as always. So that's your weekly chart. And then if we look at the monthly, look at that. Look at this thing. Nice higher high above this cluster of resistance, right? Like we couldn't get above that. And so that becomes an important level to the downside, that 24.628. So that's like, it's less than $1 lower from here. So we're going to want to watch on this pullback, on this daily cycle decline, how far it gets. And let's look at GDX, and then we'll look at some ratios, because that always gives us important clues. So GDX has it at, so not a bearish outside candle, but still a swing high as of Friday on day 20. So a day 24 high. So we're probably moving into this daily cycle low across the board. This is your weekly chart for GDX. So that weekly low is at 33.67. So you'd expect that at least gets tested. We're up here at 35. So that gives us a measure of some downside. It's a short-term downside. And similar to silver, look at how it's perched above this cluster of highs that we couldn't get through before for 3 months. That's important. It's reaching out to this here. So that 41.61 level, that's your target. So off of this pullback into a daily cycle low, you'd expect we should be able to rally at least to here as gold makes a new all-time high. Obviously, we'll see if that comes to pass. That's what we'll be watching for. And let's look at some ratios. We'll look at gold to silver, and we'll look at GDX to GLD. So gold to silver, it is still seeking out a daily cycle low. Still seeking out. So Friday was day 82, and it is set up for a swing low. And that would make a lot of sense, because if we're getting a daily cycle decline for precious metals, it would make sense that we're going to get a daily cycle low for gold to silver, because gold to silver moves inverse. When precious metals are rallying, gold to silver is going lower, and that's what it's been doing, right? And so now that we're entering a short-term pullback, it looks like, so we got to get above $79.20, just 7 cents from where we closed. So you need to see a candle like this. This is your daily chart. That would be day 82. So that would be a pretty long daily cycle for gold to silver. The expectation, though, is that we're in weekly cycle decline here, and that this is not a weekly cycle low, and this is just going to be a lower high on the weekly chart. So this was week 16, which you can see these, this last weekly cycle was 36 weeks. This was 26. That was 37. So unlikely that we've bottomed here on week 16. So that's just more evidence of potential strength for precious metals, right? So you expect something like this, maybe a little rally up to like here, because as we get the daily cycle decline, we're going to get a daily cycle rally for this thing, which maybe creates like something like this pattern on the weekly before further move down. Because of course the expectation is that we do break this low. And if we look on the monthly chart, just even bigger picture, right, you can see this bearish pattern that's just developed. This is a long-term cycle. It grinded higher and then it had a climax in the COVID crash, right? That's when silver really dropped like $11. And then we just declined, a pretty massive decline, took out this low into a month 55 low. So a full cycle was 55 months. In this case, we've had a 19-month rally. We had this little higher low. Like notice, this is a higher low than this. So at the end, so in real time, it's like, oh wait, is this just a higher low, and then we're going to make a higher high above this, and so we don't have to worry about this being an early cycle top. Now that we're getting this bearish move, it lends evidence that this is our cycle top on month 19 versus this one, which was month 44, or this one, which was month 59, or this one, which was month 30, or this one, which was month 60. I mean, you get the picture. That sets up for a very bearish for a very bearish conclusion to the cycle. Like you see, we did this, and now we've done this. So you expect we make a lower low. We'll get a bounce at some point, right? Like this is what you would expect. And that, like this whole move down would be would be indicative of a massive rally for precious metals, especially silver. And this all makes sense because the dollar, and I'll do a separate video about this, but the Dixie has topped, right? It topped for the 3-year cycle. We would expect a continued downtrend for at least through the end of the year. And if we look at GDX to GLD, very similar situation to everything else, except it actually managed to stay green for Friday, and it did not close as a swing high. So that is actually pretty telling, because that's telling you it doesn't want to slow down. So Thursday was day 23, and that is your potential swing high. But we did, like, notice we would have to close below the low of this candle, and we didn't do that. It rebounded. And this is, of course, the ratio of GDX to GLD, so miners versus gold. And we want to see this thing rally when precious metals are rallying. That's a good sign. And so the fact that this is remaining stronger than GDX itself or silver is actually a really positive sign, or especially gold, obviously. We are perched pretty high above the 10-period moving average, so I would expect this is going to pull back eventually. But that's the whole point, expecting a higher low, and the same kind of idea. Still relatively early in a new weekly cycle, and again, keep in mind that, look at this visual. We've crossed above this last ICH. That's true of all of these that we've talked about. You can see a clear pattern. We're above the previous highs. These are the futures, but same pattern. We're above these previous highs. That's a very clear sign of an uptrend there. And so that is the update for precious metals. Looking very bullish. It is a short-term pullback right now. It will present an opportunity to buy if it's going to create a higher low. You'll find that swing low, just as this was a swing low, and then off to the races again. Of course, if it takes a bearish turn, we'll be able to see that as well and step out of the way. So that's the update. Thanks for watching.